Good day, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday evening. We are now just pushing the 6:05 time frame on this May 10th, 2022. You know, this morning I got all out of whack. My nephew came into town. I thought today the president was coming because he'll often come on Air Force One. He was doing a setup, though, so he got here early. I'm going to have dinner with him tomorrow, and yes, he's attached to the White House. And to make a long story short, I got that all wrong. So the president today did talk from Washington, I guess, and he was talking about blaming everybody for the inflation scenario that he has inherited, and it is a terrible scenario, but he's got the deck of cards. You know, Trump was dealt the same deck. So everybody blames everybody. Trump blames Obama. Biden blames Trump. The next guy will blame whoever it is. That's just how it is. In the presidency, you inherit what 4 years before you or more brought about. Your job is to fix whatever's there or keep the good things going to hand it off. That's just how it works. That's why it's 4 years, not a life, such as in China, a life presidency. Got it? What about Putin? Similar there, I guess, too. Okay, so what's the big event? Tomorrow morning, you got to be dialed in. I think it's 7:30 in the morning. That's Central Time. We're going to get the core and the regular CPI numbers. And these numbers, traders are waiting to see. Are we looking at a potential top in inflation, or is the market still accelerating away? Did the market peak already and turn itself back? That's what we're waiting to find out. You know, energy prices have fallen, 8 to 10% in the past 7-8 days. Well, that takes time to get out into the chain. You do understand that they can fall on the futures board. Doesn't mean your gasoline station is charging you less money for the gasoline, the diesel, whatever you're buying. Keep that in the back of your mind. These things take time. In the bonds and the notes, the markets have been prepping themselves for this. You know, we got up to this week a 3.2 and a fraction in the 10-year, and then we fell right back under 3%. These moves are dramatic, to say the least. I was looking today for a Tuesday reversal in the stock market, and for most of the day, certainly the NASDAQ gave it to you, the others were fighting the battle back and forth. If you got up out of your chair for 20 minutes and you came back, it was a whole different look in the Dow and the Russell and in some of the markets here. It was pretty violent trading. But suffice to say, we're not out of the woods on anything. And let me come over here, because when you look at the S&P, you're down 3% for the week right now. I mean, it's just week after week, point after point. I'm laughing because I'm watching on TV as people are saying, you know, the valuations are down. This is where the bottom pickers are going to come out. Yep. Depends on your time frame, though. If you're buying now for the next 5 years, I don't see anything wrong with that. If you're a trader, not a day trader, but a trader mentality, I'm looking at the market over the next 3 months, 6 months, why are you buying? Do you see anything on that chart that's bullish yet? So time frames are everything. And as I watch the slew of analysts on all the different stations, most of them will tell you that. They're going to say, as the TV host is pushing them, they're going, are you asking me about today, or are you asking me what I think it's going to be in a year, 2 years, 3 years, 5 years, whatever it is? Keep that in the back of your mind. As futures guys, with the leverage, we're only as good as the next day. You've got to make it through today to get to tomorrow. And if you're smart, you manage your money, and the market's against you, most people come out and they live to fight another day. Why weren't people saying, well, it's as good a buy back here? Now it's as good a buy here. That's the point I'm making. Does anything on this chart look to you remotely like it's a buy? I welcome you. You can pick a low. Let's take a dart and throw it wherever you want. In bear markets, and you are in a bear market, they don't die right away. It takes time. The markets will give you these brief rallies, and they come like lightning bolts, and then they fade away on you. It's the flip-flop of the bull market. Remember the flash breaks we would get, and then 72 hours. Did the market really break? And the analyst on TV, my God, does it even seem like, what a week? I can't believe it. Well, it's the flip-flop, that's all. So from here, yeah, you can get off this CPI number. You can get an actually terrible number that the market rallies on. You just got to be careful. But will that change the real chart? And that's what you got to deal with. The chart picture is bearish. You've got a clear pattern of lower highs, lower lows. End of the discussion. You'd have to get back up over 43.03 to break the current pattern. Number two, the market is underneath the 18-day average of closes. The 100-day average in green is under the 200. So you've got the short term, the medium term, the long term, all lined up in a bearish formation pointing down. Number three, you keep hitting the Bollinger Band and getting your bounces. Okay, learn how to work with the Bollinger Band. My enhanced Bollinger Band course, when I combine it with the slow stochastics, is going to open your eye up. I keep telling you about it. I've been doing it for a year. Look at it. See what it does. At any point during this video, you can go up to the top here with your clicker. Just click on it. It'll take you right there. It explains everything. Learn. Get that in your arsenal. So as you're down there, this is the support. Support does not mean it's a turning point in the chart. This is where the guys that have been selling the rallies are taking money off the table. They'll wait for the bounce, and they'll wait to see you embed. Remember what embedded is. I'll repeat it over and over in this. Are we embedded here? Let's go to the NASDAQ. Well, you can't count tonight because we don't know how today's going to close. So you get rid of it and you go back to Tuesday. Well, both numbers were under 20. Both were under 20. They weren't the day before. So they're not embedded. You're at the extreme oversold condition that can give you a bounce. Understand that going into CPI and other games. After the report, the market will start then telling you with what this is doing, what you really have on your hands. Why? Momentum typically, not always, typically leads price. You need the two together. And then when you start understanding the importance of this algorithm and how the pros use it, you open up your game a little more. There's more to this, and as I told you, I'm recording my next course for you, which I think is a pattern you see on charts all the time. The average guy has no idea how to work with it. I'm going to teach you that. You got up to the 18-day average, took out that high, came back down. You're working on embedding. You're not there yet. Tomorrow could be the important day where a lot of things get done. Same thing here in the Russell. So going in, we are looking, I'll take this away on the Russell to just give you an idea. Both numbers were under 20, both under 20, not under 20 the day before. Thank God I've got this thing working again. We figured that out. But to make a long story short, tomorrow's a real important day. Big time important. I think the pros have gotten themselves out of the markets against the Bollinger Bands, and they're waiting with money in fist. What are they going to do? My initial instinct is, and I'll commit myself to this, if the market rallies hard, they'll look at these numbers. Are they staying embedded? If they are, they'll sell it. If they lose the embedded, they'll back away and let the market have a short-term rally and go back to the drawing board on what the chart action might do. In the VIX, you are overbought. Now, the market is not up and over 36. 36 is a number that analysts often look at to say, if you got up and closed over it, closed, I don't care if you penetrated. I'll give you an example. Over here, you got up as high as 36.64. Well, when you did that and it fell back, that's when you had that stock market rally. You do understand that. So it's a number that the traders look at. Learn key numbers on charts. Very important. So as we're here now, if you get over it again, what does it tell you? Well, if this is going up, it tells you the stock market's going down. If this nosedives from here back to the 18-day average, you're probably going to get a lift in the stock market. You're overbought, which favors the market getting rid of that by either embedding or correcting. Okay, you haven't even begun the correcting phase, the embedding phase, so maybe a correction, and that could be a little bullish. It's a flip of the coin until you get the number. And why gamble on what it's going to be? In the bond market, we're getting that rally. That's fine. You were in an oversold condition coming up to fight a battle at the 18-day average to see what the market does. And, of course, what days this is going to do it on? It's going to do it on CPI day tomorrow. In the 10-year note, the same thing. You're just locked and loaded. This market is still bearish. Even if it gets over these highs, so what? It then gives you a lower low, higher high. I still think you're going to stay stuck in the Bollinger Bands for the near term. The dollar, as long as it's embedded, I think the pros are long. I think they're looking for the upper Bollinger Band, and if the red line closes under 79, they'll call it a day. But you do understand the amount of power this market has had. This is the whole month of April almost, where the market was telling you, come in, and the kicker was to come out against Bollinger Bands. That's why they're so important, but playing the long side. Euro's the flip-flop. 40% of the dollar index is made up out of this. So there's no reason in my vocabulary to be short the euro and long the dollar index. You're one of the two. So if you've been playing this, it's the bear side here coming down. We then get to the British pound, and today the market got as high as 123.75, backing off, fully embedded. I think the pros are selling. The hardest thing tonight for me as an analyst is, do I want to have orders in before the CPI number? Because there's all kinds of setups that I want to tell my subscribers. I'll probably tell them I'll put out a special update. Why go through a major report? Everybody's keyed in on the CPI report. It's just like a Federal Reserve number. Understand the importance of certain reports and the impact they'll have on traders' thinking, especially when they come out. In the futures market coming out, and an hour later, you got a different world on your hands. That's just how it works. In Bitcoin, a state of collapse. Now, you're already one. You closed here today. This was the 10th. Tonight, you're still under the Bollinger Band, but 1 day under, 2 days under. Right here, if you take a look, you were 3 days under the Bollinger Band, 4 days. So you're really pushing it going tonight into the 5th day. You rarely get beyond 5 days. In other words, 6 days don't often happen. I've seen it happen just recently in the yen, so there are rules that don't always work, but I'm giving you the norms. When we look at Brent versus WTI crude, I said I think they're stuck at the $4 range they are. Now, here's what I'm saying with how fast inflation numbers can move on you. You're pushing 114, and now you get down to 104, 101.70. You do realize the size of that break is massive in its scope. You went in all of, peaked out on 1 day, 1, 2, 3 days later, the market had lost $12 a barrel, almost 10% of its price. I mean, that's a pretty darn big move, right? You're going to see that coming in gasoline next week. It takes about 8 days for that to roll in, and then the gasoline and everything gets out into the marketplace. So it'll be a little lower. That doesn't mean you're staying down here. You're caught between the upper and lower Bollinger Band. Learn this. That's what you're caught between. You haven't moved out of it upside or downside yet. Momentum, you've been in a correction coming down. You stepped out of the uptrend. You have no trend going in, and you're just about there in WTI. So this whole move got you up to the Bollinger Band. You fell back, couldn't hold the 18-day average. That's interesting after the first time hitting it. Comes down to it, but I don't think you're stepping out of those bands just yet. I could be wrong. I can get a surprise, but I'm not convinced that it's going to do that. It's not like heating oil. Heating oil, if you'll notice, hasn't given up this 18-day average. Look at how easily you're giving it up here and here. There's a difference in the two. So the distillates, and that's really what you're dealing with when you're dealing with heating oil, jet fuel, things of that nature, still holding on pretty good. You lost the embedded reading back here, and what do I teach you? When you're going to lose that reading, the odds favor you're going to get back to the neutral number, which is typically the main moving average, which is the 18-day average. It can be an average that's just in front of it, but it's not there right now. And then the battle starts anew, and that's what you've got. You're not trending here. You've got a higher high and a lower low. Natural gas, wow. All the way up to all the way down. So let's again take a look. Here you peaked out at 899.60. Yeah, a thermal unit. 899.60. The market starts down. You do realize these are big moves. You get down to 643. 899 to 643. unbelievable in its scope that the market did. And if you were wrong in this, you were losing at a shot $10,000 like nothing. Got to be careful here. But you were never embedded. You were overbought. And when you're up here, I was in this video saying, I don't think you're going to keep going there. You're overbought. You're not embedding. You don't stay over that upper Bollinger Band like that. It's rare. Boom, right back down. Do you have a trend to trade? No. You've got now, actually this arrow's wrong, but you have a lower low and a higher high. You're as neutral as can be here trying to figure out what to do next. And what do I want you to do next? It's simple. Take that darn cursor, move it to the top, and learn about the enhanced Bollinger Bands. I'm Ira Epstein. You have a good day.